One of my favorite stocks is Microsoft, stock ticker MSFT, and currently they are trading around $248. Year to date, they are up around 3.5%, but if we look back a little bit longer, like 1 year, they are actually down 20%, roughly in line with a lot of other software and tech companies. During the week, Microsoft released their earnings for second quarter, where they actually beat the EPS estimate of $232 by 1 cent. The revenue of $52.7 billion was missed by $450 million. Such a big company, I don't think that miss is too big of a deal when you are dealing with $52 billion. But the shares also rose quite a bit, and due in part to the revenue in the cloud was up around 18%. The day after, though, in the pre-market trading, Microsoft actually fell more than 3%, and that was because there was issued conservative guidance that prompted debate from several Wall Street analysts about the company's cloud business outlook. So, because of that, they are not too sure they can keep this growth up. And if we jump back to the price chart, if we look at the last 5 days, you can actually see that it went all the way over 250 and then immediately after almost went down to 230 and then it slowly climbed back up. This week guidance from Microsoft could indicate that the situation will get worse in the coming quarters. But let's jump into our stock valuation screener, where we will go through our different valuation models to see whether or not Microsoft is actually a decent buy at the current prices. Microsoft is currently trading at a PE non-GAAP forward ratio of around 23, which is a bit under the 5-year average, but not too much. They do have a dividend yield of just over 1% and a very healthy payout ratio below 30%. The analyst target price is $284, and the target growth is just over 11% per year. One of the metrics I personally look at is the EPS growth if it's above 10%, and for Microsoft we have hit above 24% actually in the last 5 years, and also their return on equity to be above 15%, and they are almost at 40%. One other thing I really like to see is that the net debt to EBITDA should be below 4, and in Microsoft's case it's actually 0. It's a very financially strong company, which is something we really want to see if we want to invest our money in them. Jumping into our dividend data tab, you can see the average annual total return for the last 10 years is around 25%. For the last 20 years, it's around 14%. And you can see the dividend growth rate has last time been for 7%. Over the last 3 years, they do have around 9% dividend growth. Over the last 5 years, 9.6%. And over the last 10 years, just below 11%. Coming down to the dividend growth rate, you can see that the trend is decreasing, but as you can see before, it's still a pretty high value with last time 7%. Down here for the dividend yield and a 5-year dividend yield, you can see that the price currently compared to the dividend yield is pretty much in line with the fair value, and the dividend yield also here shows there's 0% discount. If we look at the cumulative rate of return, you can see you have Microsoft in the green line versus the S&P 500, which is a red line. So Microsoft has massively outperformed the S&P 500. But let's try to take a closer look at the fair value of Microsoft. And to do that, we do have some valuation models. The first one being Graham's revised valuation model, where we take the EPS and the expected growth from the company with the average yield of AAA corporate bond and the current yield of AAA corporate bonds. Using all this, we get an intrinsic value of $167. Jumping into the next one, we do have the discounted cash flow model. And as you can see, we do have the different free cash flows from the different years, a growth rate between the different years. And using that, we can calculate an average growth rate and an applied growth rate. I think for the coming years that Microsoft will be able to grow their free cash flow at roughly the same rate. So I've applied a 12% growth rate. Using that, we can project the future free cash flow. We can discount that back to a present value. Using the cash on hand and the debt they have with the shares outstanding, we have a fair value of around 255. Jumping into the next one, the dividend discount model, where we take the dividend payout from the different years, having a growth rate between those. If we use an applied growth rate and a weighted average cost of capital from Microsoft, we arrive at an intrinsic value of $243. The next one is the multiples valuation, where you do compare Microsoft to similar companies. And in this case, I've used Oracle, VMware, Google, and Apple because they're all mastodons. In that case, Microsoft arrives at a stock price of over $700, which I think is way too high, but we'll take a look at that later. Last one is the free cash flow valuation, where we do take the price to free cash flow ratio and the free cash flow per share. Combining all this, we arrive at an intrinsic value of $232 per share. And I was lying a bit because it wasn't the last one. We do have also the Peter Lynch model, where we have the growth rate, the dividend yield, and the price to earnings ratio. And using all that, we arrive at an intrinsic value of around 140. Before we jump into the summary, thank you so much for watching. Please subscribe to the channel to support me. And if you either own Microsoft or plan to maybe, or have any other comment about it, just put them down below and I'll read everything. Now let's jump into the summary, where you can see we do have all the different valuation models here. We do have a little bit of a toggle bar, so we can exclude them or include them whether or not we want. For example, the multiples, I think that was pretty bad to have that. I also feel that the Peter Lynch model maybe not is suited for this one. Using that, we arrive at an intrinsic value of 225 with the current price of 248. It says the average current discount is just below minus 10%. I feel that Microsoft is such a great company that I would probably be okay buying at a premium of 10%. In that case, we put in a minus 10% margin of safety, and we arrive at an acceptable buy price around the current level. As mentioned in the start, I'm a huge fan of Microsoft, and anywhere in the range of 200 to 250, I think is a perfectly fine place to add if you believe in the company's long-term outlook, which I do. So at these levels, I am still buying. Thank you so much for watching. I'll see you in the next one.